Hello and welcome to Crypto Weeklies. In this video, we are going to analyze ADA, Cardano's token. None of the content is financial advice. Right now, the price of ADA is at around 43 cents. It's coming about 4% higher than last 24 hours. If we go to our website, cryptoweeklies.com, and check out the heat map over here, all charts available for free, by the way. ADA has declined by about 0.62% over the last 24 hours, but over the last 7 days, it's largely been up by about 6.5%. Over the last 30 days, again, most of the cryptos have been down. ADA not an exception. Has not done that great, down by about 27%. Over the last 90 days, again, similar story, most cryptos down. ADA also down, largely about 50-55% down. You can see that in the chart. 90 days ago would be somewhere in August. Price was at around $1. Now it's at 43 cents. But if you were to look at the larger picture from 2023 recovery in the crypto market, if you were to draw a straight line from peak to peak for ADA, if there were to be a major euphoria towards the end of Q4, that is this month, towards the end of this month or early 2026 January, like it was back in 2018, that was ADA's first bull run in that late December, early January 2018. That was the first time ADA went above that dollar level. If that kind of a euphoria phase is ahead of us, that yellow line stretch to end of December, early January, the price could meet that yellow line at around $1.50. That's again just an extrapolation of what these individual peaks have been since 2023. If you were to look for any machine learning based estimation of what that euphoria peak for ADA could look like, this machine learning model trained on weekly price action of ADA since 2017 at a weekly average, and using seasonal ARIMA and LSTM based machine learning models, the non-euphoria bull run peak for ADA, if the bull run were to conclude mid January 2026, is at around 70 cents. That's the weekly average. So keep in mind that with weekly averages, the actual candle body peak could be about 10% higher. So again, somewhere close to 77 to 80 cents. The euphoria case, that the 95 percentile 2 standard deviation euphoria ceiling for ADA mid-January is at around $1.10. And again, with that 10% wiggle room, at $1.25 could be on the cards per the euphoria bull run peak estimate for ADA. That's where the price gets really proximate to that yellow line again. In March 2024, the price did miss the yellow line, and in December it kind of broke out of the yellow line. So again, if we were to go back to a rally which is slightly shy of that peak to peak extension line, then again that $1.25 scenario is predicted by the machine learning model as well. The regression based estimation of what the fair value for ADA is, and also what the euphoria ceiling could look like. Right now that $1.64 is the euphoria case for ADA per the polynomial regression based valuation. If the price were to meet the fair value before conclusion of that bull run, that price action could meet the fair value at around $1.60 to $1.70. If we go by where the current price is again close to the 2 standard deviation undervaluation green line. Again, whenever the price came close to this green line, again, this is a non-linear model. Historically speaking, that has been a asymmetric DC opportunity. Again, not financial advice. Again, right now the regression based model is in an upswing. If it were to go to the 1 standard deviation residual to the downside and conclude the rally, at that point, then the non-euphoria ceiling for ADA is at around 80 cents. So that again is in line with what we spoke in terms of the machine learning models as well. The non-euphoria peak is at around 75 to 80 cents, and the euphoria peak is at somewhere between $1.25 to $1.50. The time-weighted average price analysis says that the price is now below the blue line, which is the time-weighted average price. Whenever the price has been below the time-weighted average price, that has been offered a great accumulation territory. Thus far, you can see when and especially since 2022 began, whenever the price fell below that 49 to 50 cents level, that's where the time weighted average price is. that has offered us serious accumulation phase over here, first between 2022 May to about December 2023, then again back in May 2024 till about November 2024, and now in the third iteration between November 2025 and potentially late December 2025. That's where the DCA opportunity per the time weighted average price model is. And again, there have been especially during its initial days, the time weighted average price did not make that much of a sound analysis on what the accumulation territory was for ADA, especially when in February 2018 the time weighted average price was at around 39 cents, but the bottom was at around about 2 to 3 cents. As the asset kind of matured from cycle to cycle, the time weighted average price became more and more important in terms of identifying if the price has sufficiently dipped to again do any accumulation analysis. Right now, it's the case that the price is lower than the time weighted average price. The simple moving average price risk level, the 20-week simple moving average price risk level, for context, the 20-week simple moving average price for ADA is at around 71 cents. That's the red line over here. The 21-week exponential moving average is at around 64 cents. So that could be a rally, that the non-euphoria bull run peak that we discussed in the first part of the video, that rally back to 70 to 73 cents. That's where the 20-week simple moving average and the 50-week simple moving average reside. The 20-week simple moving average price risk has gone down quite a bit as the price is significantly below the 20-week simple moving average price. Risk is somewhere at between 0.1 to 0.2. And if we were to only look at the phases of the market cycle when the 20-week simple moving average price risk is lower than 0.2, it's essentially during the major first drop in a bear market, or during once the bear market is in conclusion per the 4-year market cycle theory, that is again towards the end after the post halving year. Ever since that, if ADA is in, let's say, in a recovery year or in the halving year, trading at a risk level less than 0.2, like it was in 2023, 2024, or even in 2025, accumulating ADA at those point in time was not the worst idea. If we go and check what are some of the levels where the rally kind of in terms of a positive or bullish phase for ADA since 2023, most of the rallies did go to that between 0.3 to 0.5 risk. And if ADA were to replicate that performance in later half of December 2025 and early January 2026, the ceiling per the 20-week simple moving average for ADA is somewhere between $1.15 and about $1.25. So, and the top end of the ceiling is at around $1.50. So that's the 20-week simple moving average price based risk estimation. Overall, again, the commonality or the confluence across all of these individual models is the non-euphoria at around 70 to 80 cents, and the euphoria between $1.50 and $1.25 and $1.50. And these the base peak estimation again right now these estimates are again too far away from the current price. The conservative scenario is at around $3. That would take some rally from here to that base peak estimation, as ADA has underperformed even in the post halving year. These aggregated models are not as useful as the other models that presented in terms of the analysis of price action in a predictive sense. Overall, again, if we were to summarize ADA and ADA's forecast in coming weeks, is the first area between 70 cents rally between the current price and 70 to 80 cents, and if there is a stretch, that would be somewhere between $1.15 to $1.50. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day.